No, thank you. This is a wonderful opportunity to discuss something of truly transformational value to the industry. Across the world, I think the relationship between pension funds and private equity, and I'm using private equity in a broader sense, including all the asset classes, venture, private, credit, etc., infrastructure, is a symbiotic one because both have a long-term value creation thesis at its core. And in India, I think this critical sort of backbone is now getting established. That's wonderful news. I understand there's 17 trillion rupees under management under the Pension Fund Authority Trust, and even if you look at 1%, hopefully a little bit more over a period of time, as it's a significant amount, about $2 billion, give or take, which we're talking about, potentially available as sophisticated institutional anchor capital. That is a win-win, sort of hopefully a win-win situation for the pensioners to get good quality returns with scale benefits. But for the private equity industry, if I may just from personal anecdote say it, what we are lacking is institutional anchors of scale. We have some entities which provide anchors for SME or smaller funds. They do a good job of it. And at the higher end, of course, 80% of capital, LP capital, comes from foreign investors, but as I think McKinsey presented yesterday, about 2/3 of it is focused on 6 GPs. So we need to broad base the industry if you're talking about India becoming one of the larger private equity markets. So that's the backdrop, but would love to hear from Ms. Suparna Tandon, CEO of NPS over the last year and a half, and at a time when significant, exciting things are happening, for you to give us an idea of the path ahead, and then we can go into a little bit more detailed discussions on this.
Thank you, Paddy. First of all, I would like to thank IVCA, the entire team of IVCA, for inviting me here and helping me interact with all of you distinguished speakers and other stakeholders. And it's not just this conference, but they're helping us, in fact, to put up this whole AIF experiment, if I may call it, experiment together. And it's going to be successful, I'm sure of that. So coming back to your question, just a little bit about what the regulator has assigned to us in terms of the AIF Fund of Funds platform that we are planning to launch. So it's not that AIFs were not allowed as an eligible investment class for the pension funds. So if you're aware of the NPS product portfolio, there was a separate category called A, that is the alternates category, where AIFs and the REITs and InvITs and several other such asset classes were allowed. But because of the nature of the A category and the nature of the AIFs being illiquid and close-ended funds, and on the other side, the subscribers were free to redeem the money whenever they wanted. So it effectively stopped pension funds from taking any call on AIF altogether. So just by a stroke of the pen, what has happened is the A category scheme has been dismantled, and it has been merged with the equity and the corporate bond scheme. So now we have 1% of the government AUM, as you rightly said, and up to 5% of the non-government AUM for the equity and the corporate bonds, which are available to us. So that was the first important change, the enabling change that has happened. The second step is basically asking NPS Trust to take over the work of setting up the platform, sort of aggregating the energies, the resources in terms of due diligence, while keeping the subscriber interests in mind. And here, the discussion I've been having since yesterday, when I look at how did I set up the platform, what went into it, the basic things we looked at was that we are here to enable long-term subscriber returns, risk-adjusted returns. For us, AIF is another means of diversification. Third is that the governance is something which is most important for us. Because if you see the name NPS Trust, So the subscribers' money, we hold the funds in trust. So how do we put in place transparent government standards, institutional processes, so that we are able to onboard the best of the AIFs on behalf of the pension funds? So that was basically what we thought while putting together the platform.
Sorry, is this working?
No,
No, there's one on the other side. Okay, sorry. No, I think that's an excellent approach, Suparna. I think the sort of unilateral focus on getting superior returns for your policyholders rather than tying yourself in knots and on some other goals. And I think that the whole approach of aggregation and having sort of a common portal and hopefully a common due diligence framework seems to be a no-brainer. Because for the LPs, which is the pension fund assets and the managers, obviously they can leverage off the scale of the diligence done by you and your ability to also negotiate as an aggregate commitment, therefore getting better benefits as anchor investors, better terms. But even for the GPs, I think it's a boon because it makes their availability of significant anchor capital rather than much smaller pieces which don't act as anchor. But even from a transparency, reporting, governance perspective, having a single sort of point available, though there may be top-up requirements with individual investors, seems to be a no-brainer. That it'll be helpful to the industry, both sides of the industry. So it'll be great, Suparna, if you could talk a little bit more on this, how this aggregation and portal framework is likely to work. I understand you're piloting it, as was revealed yesterday, as well. But I mean, what are the elements that you see being covered by it, and what are the additional elements that would be need to be done outside that framework?
Yeah, thank you. I think that's something which I should clarify here. So basically the platform, the so-called platform, will rest on 3 pillars. The first pillar will be centralized due diligence, centralized compliance, centralized monitoring, following up on the call calendar, the commitments, the MIS. So the entire work related to this will be done by the AIF cell structure, which we are setting up in NPS Trust. So it's going to be independent operationally. They do the entire sourcing, the origination of deals, the due diligence, talking to the GPs, doing third-party due diligence, whatever is it that needs to be done. So that will be done by us on behalf of the pension funds. Because when we were looking at this, it just didn't make sense for a GP to talk to 10 different pension funds with 10 different set of standards and policies and risk appetite and all that. That was very inefficient and absolutely not desirable. So therefore, this is the first pillar, centralized due diligence. At the same time, keeping in view the conflict of interest that would arise should NPS Trust get into the actual decision making. There is decentralization of the investment decision. So centralized due diligence, compliance monitoring, decentralized investment decision making. That's the first. The second pillar is the governance structure. I already stressed about the need for governance. So we have a tiered system of decision making. So once the due diligence happens, then this AIF team presents the proposals to a screening committee. The screening committee has the CIOs of all the 10 pension funds as members. And it also has certain experts, independent experts. And the screening committee will interact with the GPs, and they come to a decision of yes or no. So they simply screen the proposals at that level, and then we release those proposals to the 10 pension funds. The 10 pension funds, if they want, they can do an additional layer of due diligence, enhanced due diligence, which I'm sure may not happen. That's my expectation, because we've onboarded them through the entire process. So once the pension funds take a call on a pension fund, they also have to take a call on the amount, what is the appetite for that particular AIF. And then we take over again. All the negotiation is done with NPS Trust, the terms and conditions. We facilitate the participation agreements, the contribution agreements, and we represent the pension funds on the LBAC. We take over the entire life cycle of the investment after that. That's the governance. The third is the digital platform that Mr. Raman also was talking about. And that's something which we are planning to launch very soon. And that is going to be a kind of a single window for the GPs to interact with us in terms of the screening criteria. There's a simple screening test, and if they cross that threshold, then they are invited to submit their applications. And then most of the processes thereafter will be online, including the compliance, the reporting, MIS, and everything.
Got it.
So that's a nutshell of what.
No, that's very helpful to understand. So as I sort of take away the gist of it, the major areas where friction is being reduced and economies of scale is being provided is, one is of course the application itself through the digital platform. The second is the bulk of the diligence, maybe even all of it, depending on whether there is any top-up required or not, to be done by this entire significant sized asset pool done through your framework. And then on the documentation as well, rather than having to negotiate contribution agreements with several different stakeholders, ability to negotiate with one. And on your part, representing pension holders, you get the benefit of scale in that negotiation rather than negotiating for smaller chunks of capital. So I think it seems to be a win-win on all counts. In terms of the, you mentioned the governance bodies, be it your screening committee where you have expert members as well as your team. You call that the AIF cell, I think.
Yeah, there's a separate AIF cell, if I may just dwell on that. So it's going to be very, very operationally independent from the rest of NPS Trust. So we are trying to get people from the field, experts in the space. So it's initially we're thinking of a 15, 20 member team headed by an executive VP, and we actually need good people to join our team. So that is going to take care of this entire AIF portfolio in terms of the due diligence and everything else.
So if there are people with expertise, I think this is a cause for the industry and for nation building better than none. So the news is NPS Trust is looking to build expertise in the AIF cell, and I think the vision is a fantastic one. The leadership, as we saw yesterday and today, is visionary. It's about executing this. If we manage to execute sort of good, robust investments on behalf of pension holders into the private equity industry, I think it's just it just changes the game for the Indian private equity venture capital industries. Rather, this should be priority number one for the industry, in my opinion. Really, if we can get this, this is something we've been talking about for a long time, and finally, it seems to be at a stage where we are talking about finite timeframes in the near term for rollout, with a pilot going on the project. So in terms of the screening process itself, the AIF cell and the screening committee looking at it, and then the response by the pension fund managers once you have forwarded. Obviously, some of this is still being specced out. We understand that. But do you have a sense of what sort of time frames and all could be potentially possible here?
So we haven't actually frozen the time frames. As you know, there are several kind of layers here, additional layers. But we do expect a shorter turnaround time compared to the other industry players that are there, and that is what we want to build as our USP.
Right.
So we are going to have indicative timelines for each. That's a transparency also.
Yeah.
For each of the processes, so you can immediately onboard the moment you get onto the platform.
Yeah.
And there will be finite, or let's say indicative timelines for the first stage of due diligence, the detailed due diligence, time to take to the screening committee, and even when the pension funds revert to us, they are going to be expected to revert to us within a very short, if I may say, timeline.
So I think the most important fact here is that you're conscious of quick turnarounds, and within the frameworks of doing full diligence, etc. You will
without compromising on the quality.
Yes.
Because I don't think dilly-dallying helps anywhere, and we know that this is something which the public sector that's one of the attributes which people think that the public sector has, that the turnaround time is higher. We want to dispel.
No, that's fantastic to hear. So, so maybe since we have, this is such, I know there's great interest in the audience on this industry, on this new development. I'm happy to open up to some questions, but if not, then given we have a few minutes left, I'll fill the time with my own. I think you have a question there. While the mic is reaching there, I think as a practitioner, I guess it's important for all of us that we deliver on strong risk-adjusted returns to pensioners, because that could really make us true success out of it. And I think a lot of us have worked in high-quality institutions with strong DNA on reporting governance, and that's important that in this case it's met more than anywhere else. Sorry, over to you.
Ma'am, thank you so much, and great points, Paddy. Ma'am, the question I had for you was, this is another pool of money coming from the public sector undertaking ecosystem, but it is on top of other pools of money that we already have in the market.
Sorry?
Can you hear me?
Yeah, now better.
Yeah,
I think
Ajit from Blue Green Ventures. So I was just talking about the fact that there are other pools of money that are already available to us, which are investing in funds at this point in time. You've got the SIDBI fund of funds, you've got SRI, you've got NABARD, you now have the RDI fund pool. Each of them have got slightly different structuring. So for instance, SIDBI and other folks have got this 1:4 or 1:5 ratio, not more than 20%. Right? RDIF comes in with those 6-7 sectors, but there is a 1:1 leverage. And of course, there are also other carry structures, fee structures are all different as well. Is there any thinking that has gone into your structuring at this point in time of how these rules, because it has become a little bit more difficult in terms of how the structures work?
So the main difference between the SIDBI and the NIF was vis-a-vis the NPS trust is the objective. And our objective is to deliver long-term risk-adjusted returns. For us, it's the subscriber returns which are most important. So therefore, we are agnostic to any sector, to any stage, early stage or mature or whatever. So we are agnostic to that extent. We expect that the diversification will happen at the NPS trust level, because we understand that different PFs may have different objectives or liking for certain sectors. But very knowingly, we are not putting in any other rules, except for the fact that there are two regulatory criteria which have to be met. The first is that the target corpus should be 100 crore or more. So that's as liberal as can be. And the second is that these funds cannot invest overseas. Beyond that, we are open to all kinds of funds, subject to the evaluation framework, the rating criteria. If they cross those parameters, then they have all equal opportunity for us to invest in them.
If I could just add, as a practitioner and somebody who's been in the industry for a couple of decades, my understanding is a lot of the bodies you spoke about really fund below a certain scale of fund sizes. Of course, it's moving around a bit, moving up, but otherwise it's been typically targeted at funds below a certain overall size. Whereas in the middle, which is the belly of the market, there have been few sort of institutional investors, domestic institutional investors who are able to anchor funds. So I think in that sense, as a practitioner, I do feel that apart from the sole objective on pension holders' returns, it is different from some of the existing pockets that are there.
The sweet spots are 300 to 400 crores even for these funds at this point in time. So it's not like it's sub 100. So I think that's a number that I think I'm hearing.
I meant in the fund size. So like say, if you have a fund above say 2,000 crores, they may or may not look at it. These pockets look at funds below a certain size.
Got it.
One question for you. I think you can take the liberty of
excellent comments by Suparna, Tandon and Paddy. Just one thing I couldn't get was this 1% and 1%. There was some 2% of something. If you could just clarify that, Suparna ji.
Okay. So, if you know, the NPS started as majorly a government pension kind of a product. And then later, the corporate sector and the private sector got added. So, there are different rules and different schemes for the government subscribers and the non-government. All I said is, the entire government AUM, 1% of that is available to us to invest in AIFs. The entire non-government AUM restricted to equity and corporate bonds, 5% of that is available to us for this universe.
Okay, I think we've got the next speaker ready, so we're going to get the biggest panel. Okay, now we have Rajat has given the green signal if anybody has one more question. Oh, I think they are.
Someone has a question?
Hi. Even though you mentioned on the timeline would be quick, so just wanted to check if there's the expected date when the applications will open and expected date, the target date, the funds to be invested in.
So I know that question is on top of everyone's mind, but the launch of the platform is not in my hands. We are ready to launch, I can say that, but it's going to be launched in a public thing. So
Okay.
let's wait for the date.
Yeah, good afternoon, everyone. Thanks for this insights. So I have a question, and probably I would request a clarity along with it. So over here, NPS would be investing in the AIF fund, or would it be investing in the company, the portfolio company? I want to correlate this with the point where you could add clarity. You mentioned there would be 10 funds which would be evaluating. If you can just correlate these 2 points. Okay, first would be whether you will be investing in the AIF fund or in the company itself.
So we will not be investing in the companies. We will invest with the GP. The GP takes the call on the investing company. That's number one. Number two, the 10 pension funds, they are independent in the decision that they want to make to invest in a particular fund or not to invest, right? Okay. We are doing the middle office and the back office operations, so to speak, on their behalf. We do the due diligence and we sort of place it before them. This is what is on offer. Choose which one you want to take, and depending on whether it's an SBI or a government pension fund or a DSP or an HDSC or an LIC, whatever suits their investment philosophy, their risk appetite, they take the call. So you might have all the 10 pension funds wanting to invest in A entity and none of them wanting to invest, or several of them wanting to invest.
Would these be like 10 different checks or one
no,
check?
No, it will be one. That's exactly what I said. After they take a decision, then we take over and we negotiate, and it's one NPS amount of contribution which goes to the AIF.
Understood. Thank you so much for the clarity.
Thank you. This is, sorry.
Just a continuation of that, Vikrant this side from Succeed Innovation Fund. I just wanted to ask, would you also be open to invest in angel funds? The funds which are classified as angel funds.
I think minimum size of 100 crores was mentioned earlier as a threshold.
It's a category wise, it's called Cat 1 angel funds.
Cat 1, Cat 2, all funds are eligible.
Okay. I think this might be a point for you to review internally. Cat funds are, angel funds are difficult funds for institutionals to invest, and we would be very happy to have that, open up for us.
Thank you, and this is something, as I said, long awaited, the bridge between pension funds and the private equity industry. We look forward to, under your visionary leadership, a quick rollout in the coming months. Thank you.